let's continue on with section 1-2 on things that affect the accounting equation. And again, this is the most crucial thing I want to make sure you know in this class when you walk out the door every day and at the end of the trimester. And the accounting equation is ALO, and it's assets equals liabilities and owner's equity. And like any algebraic equation, the left side has to equal the right side, so these assets have to equal the sum of these two over here. And just to remind you that assets defined are things that you own and they have value. So if I sell them, they have value, I own them. And liabilities are things that we owe, and we owe them to creditors. They're called creditors when we owe them. And those creditors have the right to the assets. So if I liquidate all the assets, meaning I sell them and convert them to cash, then that cash that I have, creditors have the right first to whatever they're owed. And then whatever assets are left, the owner has a claim to, or the rights to those assets. So owner's equity, when defined, is really just the difference between assets and liabilities. I have all my assets, I pay my creditors, so I owed them money and I paid them, and what's left over. So that is the accounting equation. And you should have done this template and set it up already. If not, please pause right now and do so. But for this business, Delgado Web Services, these are the accounts. So I would maybe circle those and out to the side write accounts, and cash, accounts receivable, supplies, and prepaid insurance are all assets. They're all things we own. So they're classified. I'd write that out to the side if it were me. Classification. Accounts payable is a liability, taxes payable is a liability, mortgage payable is a liability. If it's owed, it's a liability, and it's typically going to have the word payable on it. And then the owner's equity account is Michael Delgado. So again, you have to be able to classify the account as assets, liabilities, or owner's equity, but the account or account name is this line. And then the transactions are going to happen, which again are the activities that happen to a business. So you should have this all set up already. So just a few other things I want you to get in your notes is this section right now. And tomorrow we'll do this one. But the word on account, the words on account, what does that mean? What that means is it's on credit, which says that I can either buy or sell an item and decide to pay or receive the money later. So I can buy it and pay later, or I can sell it and receive later. And the account name that is impacted when this happens is different. So the first thing that can happen is I can buy on account. Buy on account. What does buy on account mean? It means I bought an item and I'm going to pay cash later. When I buy, I have to pay. And that seems obvious, but you're going to need to keep track of that in your mind. And when that happens, the account name is going to be accounts payable with the name of the vendor or the creditor. Okay? And then the other thing that can happen is that I sell on account. So a sale on account is when I sell an item and I receive cash later. And the name of the account is accounts receivable, and that should make sense. If I'm paying later, it's payable. If I'm receiving later, it's receivable. Okay? So I bought and pay later, I sold and receive later. So that's going to be important when we start to go through transactions. So I'm going back now to this spreadsheet that we have, that you've set up. So first we're going to say that on January 1st, the business has nothing in any of these accounts that we have. Okay? So again, Main Street Services is a customer that we sell to and will receive later. accounts payable, Canyon Office Supplies is a vendor or a creditor because we're going to pay them later when we buy on account. So no balances to start. So the first thing that I really need to do when I have a business is I need to, on January the 2nd, I get cash from the owner to get the business started, to get it going. So January 2nd, I received cash from Michael Delgado, owner, as an investment, $2,000. Okay? So what I want to do is I want to identify what accounts are affected. I want to classify those accounts as either an asset, liability, owner's equity. I want to know if they're going up or down. And then I'm going to calculate new balances and make sure I'm still equal. Every single time I'm doing that. What accounts are affected, how to classify them, are they going up or down, calculate a new balance for every account, and then make sure that my accounting equation is still balanced, that it still equals left side and right side. So, when I see the words receive cash, what do I think? I see receive cash, I think the account cash must be affected. So cash is affected. Is it going up or down? It's an asset, sorry, classify it. Is it going up or down? It is going up because I received. If I pay, it goes down. If I receive, it goes up. So I receive cash, so it is going up $2,000. Okay? Does anything happen to accounts receivable? On account. If I don't see the words on account, accounts receivable, not affected, so I leave it blank. Anything happen to supplies? Don't see the word supply anywhere. Leave it blank. Anything happen to insurance? Don't see insurance anywhere. Leave it blank. Am I going to owe someone on account? No. Leave it blank. But it says Michael Delgado, the owner. So Michael Delgado is my owner. Anytime the owner does anything, this account is affected. So the question is, how is it affected? It's classified as owner's equity. How is it affected? Is it going up or down? So he had no claim to the assets before this transaction. Once he gave $2,000 to the business, he has a claim to get that $2,000 out if the business went under right after this transaction or down the road. So that means that it's going up. Okay? So up $2,000. So I have identified the two accounts that are affected. I classified them as asset and owner's equity. Now I'm going to calculate the new balance. Every time I calculate a balance, I need to put something in for every single account. When I'm doing transactions, I only do plus or minus to the two accounts or more that are affected. Okay? So if I calculate all the new balances here after this first transaction, I would get 2,000, 0, 0, 0, 0, 2,000. And the last step is I want to make sure my left side still equals my right side. So I take 0, 0, 0, and 2,000. I get 2,000 is equal to 0 plus 2,000, 2,000. I'm equal, I'm happy. Okay? So then the next transaction that we have. And let me just tell you that if any of these don't make sense to you, you really need to be thinking hard, because these 11 transactions that we're going to do over and over and over and over again throughout these 2 trimesters. And if I don't have that foundation, meaning I know the letters of the alphabet, I can't start putting together the sentences and paragraphs down the road. I can't apply this to other things. So I have to understand what's happening with these. If you don't, get a hold of one of the teachers that knows, including me. I'll explain it a different way. We'll go through some other examples, but you literally have to know this stuff. So next we have transaction 2, which is on January the 2nd. We paid cash for supplies, $165. So again, what am I going to do? I'm just going to go by account and say, did it get affected? And I'll tell you which words tell me it did. So, was cash affected? And I see the words paid cash, so I know cash is affected. So then cash is an asset. Is it going up or down? If I paid it, that means the business is getting rid of cash to someone. So it is going down. It is a negative $165. Okay. The next account, accounts receivable. Nothing was on account, so it's not affected. Did anything happen to supplies? It says I paid cash for supplies, so yes, supplies is definitely affected. Supplies is classified as an asset. And then I need to know, is it going up or down? Well, the business had no supplies, and now they just paid cash to get some. They got some, so it is going up. It is going up $165. Did anything happen to insurance? No. Did anything happen to accounts payable on account? No, because I don't see those words on account. And then, did anything happen to Michael Delgado Capital? I see nothing to do with the owner here. He did nothing. The business paid cash for supplies. So that is done. So I want to again make sure that I'm equal once I compute my balances. So if I compute all these balances, I would be at 1835. I take 2,000 minus 165. I'm at 0 for accounts receivable, 165, 0 for prepaid insurance, 0 for liabilities, and 2,000 for owner's equity. And I want to make sure it equals. So if I add up this right-hand side, 1835 plus 165 is $2,000. And then the right-hand side, 0 plus 2,000 is $2,000. So I'm equal. $2,000 equals $2,000. So I am happy. So then I'm going to go to the third transaction that happened. January 3rd, I paid cash for insurance, $900. Paid cash for insurance, $900. So, starting over here again, did anything happen to cash? Well, yes, I paid cash, so cash was affected. It is an asset. Is it going up or down? It's going down because I paid cash. The business paid cash. So it's going down $900. Did anything happen to receivable? Was it on account? No. Did anything happen to supplies? No. I got insurance, so nothing to supplies. But did something happen to prepaid insurance? Yes. I got some. I went and bought some insurance and paid for it already. Paid for it ahead of the coverage. So this policy then means that it went up $900. I didn't have any coverage. Now I have $900 of coverage. Did anything happen to, and again, prepaid insurance is an asset. Did anything happen to liabilities? Nope, not on account. Did anything happen with Michael Delgado? Did he do anything with the business? No, he did not. So there's my two accounts that are affected. I'm going to compute my new balance again. And when I do that, I'm at $935 for cash, 0 for accounts receivable, $165 supplies, $900 for prepaid insurance, 0 for accounts payable, $2,000 for capital, Michael Delgado Capital. I want to make sure it equals again. So $935 plus $165 plus $900 equals $2,000. And then on the right side, that equals $2,000. Okay? So then we're going to go on to the fourth transaction. The fourth transaction. It is January the